All right, everybody, welcome. Welcome to this training video. And in this video, we're going to talk about how to write off $61,000 into your solo 401k. Okay, and that's what we're really going to dip into this bit in this video. And at the end, we're also going to talk about how to actually self-direct your retirement contributions that you put into your solo 401k. Ready? All right, let's go, guys. So before we get really started, let's kind of talk about how do you really put away $61,000 into 401k, into solo 401k. First, let's define solo 401k. Solo 401k is really for individuals, for solopreneurs. Whether you have your business as a single member LLC or an S corporation, right? It doesn't matter. If you're the only employee of your business, you can open up what's called a solo 401k. Now, if it's you and your spouse, whether the spouse is an employee of the business or if the spouse is a owner of the business, you together, you can still do a solo 401k. Now, generally speaking, the way contributions work into the solo 401k, you as an individual are able to put away $20,500 from your paycheck, and the company can contribute up to $40,500, and that's exactly what we're going to cover in today. So in order for us to understand how 401k works, whether it's a solo 401k or a regular 401k, let's kind of get into details of how the technicalities of it, right? Because we really need to understand how can we do $61,000. So anybody in America that has a job, whether you work for yourself or you work for somebody else, right? If that company offers a 401k, you as an individual have an option to put away up to $20,500 into your 401k from your paycheck. This has nothing to do with your company. This has nothing to do with the employer, the person that you work for. You can put away $20,500. This is you as an individual. By the way, this is a pretty good drawing, right? This is the only thing I can draw. But you can put away $20,500. If you are over the age of 50, then you can put away $20,500, right? That's what's called a catch-up. Excuse me, I'll take that back. I think I misspoke. You can put away $6,500. That's called catch-up contribution, okay? So in total, you can put away $27,000 from your paycheck. So when you own your own business and you set up, whether you set up a regular 401k or a solo 401k, you can put away up to $20,500 from your paycheck. So if you are getting paid $100,000 salary from your business, well, $20,500 of that can be redirected to a 401k, and you're only going to end up paying taxes on $79,500, right? Because you put the money into the 401k. Now, when you have a solo 401k, rules change, okay? That means, hey, business owner, you can still put away $20,500 from your paycheck into a solo 401k, just like you do with a regular 401k. Remember, let's say you get paid on a monthly basis. When you get paid on a monthly basis, you have to withdraw from your paycheck what you want to put into 401k or a solo 401k, and then put that money into the solo 401k. That needs to happen before December 31st. All of that money of $20,500 has to be withdrawn from the paycheck and put it into your 401k. Now, what happens that you're a solo 401k now? Your company, your business entity can put away up to 25% of your salary into the solo 401k. You follow that, right? Up to 25%. This is now company contribution. You as an individual were able to do $20,500. Your company can now do 25% of your salary. Now, in order to achieve the maximum savings of $61,000, let's assume you're under the age of 50. To achieve the $61,000 contribution right here, your company needs to put away $40,500. That is 25% of your salary. So in this case, our salary has to be, I believe, $162,000. So if you're paying yourself $162,000 or more in your salary, in your W-2 salary, assuming you're an S corporation, you can put away $40,500. What if you're not paying yourself out $162,000 salary? That's okay. If your salary is $100,000, 25% of the $100,000 will be $25,000. $25,000 plus the $20,500 by your own contribution from your paycheck, that's still over about $46,000 in contributions, okay? But the maximum contribution into your 401k cannot exceed $61,000. Can you put $61,000 into 401k? You absolutely can, right? If your salary is there at $162,000, then you can put away $40,500. This is a company match. By the way, what I told you earlier is that $20,500 from your paycheck has to be taken out of your paycheck throughout the year and then right away contributed or deposited into your solo 401k, right? The company match actually doesn't have to be done until next year before tax filing deadline for you. So the $40,500 can be deposited next year. For example, if you're doing tax planning for yourself, and you should be doing tax planning, if you've got a regular tax preparer, you do not have a tax planner, okay? When you're doing tax planning for yourself, and let's say you don't have the cash flow of $61,000, that's okay, because you can still go ahead with the $20,500 right here from your own paycheck. And you know the next year you're gonna have cash flow. There is going to be cash in your business. That's awesome, right? So when the next year comes, you still have until the tax filing deadline to put away additional $40,500 or up to 25%. What if you don't have $40,500? What if you only have extra $15,000? That's okay. It's up to this amount right here, up to that amount, okay? So that's why you want to make sure. By the way, if you have any questions on this right now, drop it in the comment section below, and either myself or my team will be able to answer that right away. But go ahead and put that in. If anything is unclear what I'm saying right now, please go ahead and put the question in the comment section below. We'll make sure to answer that. But coming back to this scenario right here, now let's go back for a second and talk about a spouse. If you've got a spouse that works for the business, or the spouse is another owner of the business, you can do exact same amount contributions and follow this exact same strategy to be able to contribute, again, $20,500 from the paycheck and $40,500 from the business, right? Now, of course, not everybody might be able to meet the $40,500 because your salary might not be there, right? But if you pay yourself $100,000, then that would be it. Now let's talk about for a second. Right now I've been talking about if you have an S corporation. What if you have a single member LLC, a Schedule C, or sole proprietor? You're filing taxes as a Schedule C, okay? Now in that case, the company is still going to match you, right? The company is still going to make a contribution, but the company is not going to calculate their contribution based on your salary. Instead, it's going to calculate it based on the net profit of the business. Because you're a sole proprietor or filing taxes as a sole proprietor on Schedule C, you don't take a salary, right? But if you don't take a salary, then the company match contribution will be counted based on your net profit. You're still going to have $20,500 deferral. That still stays. But the company match will be from your net profit, okay? So if you have any questions, go ahead and put in the likes. In the comment section below. We'll make sure to answer that. Now let's talk about the final piece about this. Let's say you're top of an individual that you're investor savvy, right? You want to invest your own money and you don't want to give it to a financial institution to handle it for you. Well, when you open up a solo 401k, and want to follow this entire process, you can have it self-direct. You can actually self-direct your retirement contributions in however you want. You can either put it by stocks and securities, whichever stocks and securities you want. You can actually also set it up in a way where you can self-direct your contributions in real estate, right? We don't recommend it for all real estate transactions, right? But definitely make sure you plan for that with your tax advisor. Or if you're into crypto, you can also do self-directed into a crypto. Like for example, me personally, I self-direct my contributions, right, into cryptocurrency, right? Not everybody should follow this advice, obviously, because cryptocurrencies are risky, right? But anyways, you can have, now this is regardless of what type of retirement account that you have, whether it's a solo 401k, a regular 401k, an IRA, a Roth IRA, whatever that is, you can set it up in a way where you are self-directing it and really taking control of your own investments as you're doing them. Okay, I hope this was helpful. Let me know if you have any questions. Drop your questions in the comment section below. We'll definitely make sure to answer that. Thanks so much.